me through where the stock is trading right now. I mean, what do you expect in terms of earnings? What's the key metric you're looking for after the bell? And I guess based on that, what would it take for you to change that price target?
Sure. Well, I mean, I'm pretty sure I'm going to be changing the price target after earnings today, most likely. Don't know the direction, obviously. Twitter's yeah. So we had a buy. I had a buy on Twitter. That I put on in the spring. I saw accelerating growth. I saw some exciting stuff, and then first the pandemic hit. And we got all kinds of different things going on, and sort of these three surges of greater engagement because of billions of people around the world sheltering at home. The political conversation obviously got very heated in the run-up to the election. And then the third sort of surge, I guess, that is hitting now hit in the fourth quarter, started hitting the third quarter, was also the release of all that pent-up advertising that was, held back in the first and second quarters because people didn't know, what the heck was going to happen with the pandemic. So, I see a lot of positive things, but before, I get, I absolutely like the buy. I had put the buy on back in November, put it back on, and then I think it was last week it exceeded 53. So I don't know. We'll see. But I'm looking for 52 cents. I mean, I'm well above consensus on EPS. I think consensus is 32. And I mean, I think that there's a lot there.
Yeah. I'm curious if you're surprised by how much the stock has rebounded from that sell-off, that pretty steep sell-off we saw early last month when Twitter wasn't the only social media company to do this, but when Twitter booted then at the time President Trump off the platform. I mean, part of the reason it sold off as steeply as it did was because of that 89 million follower base of the president. So many of them, something like half of them, were considered particularly monetizable in terms of daily active users for the company.
Absolutely. So, there's a couple of moving parts. Like I said, there's a lot of this greater engagement, but there's also, from the beginning of last year, they have overhauled their software and actually made it a lot easier for them to, do things like subscription pricing, like, all kinds of different schemes based on, likes or upvotes or any votes, or there's all kinds of different mechanisms that they can try out now to improve monetization, to have completely new monetization schemes, right? So that's one side. And then obviously they're going to lose. We don't know how many people are going to leave the platform because of the President Trump, the President Trump situation, right, and the whole political conversation. But I think that on the opposite side, I think a lot of people respected Twitter for reaching in and flagging content that was considered to be misinformation or whatever. I mean, I think there's two sides to that. But the thing I'm focused on is how they're going to be able to use that software to really innovate, rapidly and iteratively, like they should be able, all their ideas that they have, because Dorsey's thought of all these schemes, he just has never been able to implement them rapidly enough. But now he's got this new software platform, so it should be right. So that's what I'm looking for, right? But I'm also very valuation conscious because of their history of misexecution, frankly.
Shepard Smith here. Thanks for watching CNBC on YouTube.